Happy Friday, traders. It is October 4th, 2019, 8 a.m., 8:01 a.m. Chicago time. This is episode number 1610, non-farm payroll day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on, given the release of the non-farm payrolls, the number actually came out lower on the payrolls, but the unemployment rate is at a 50-year low, 3.5% versus 3.7%. The non-farm payrolls came in at 136,000 versus 145,000. So overall, the market responded by quickly bursting upwards. We had a little bit of a pullback to the prior day's close in the ES, and now we have a secondary continuation, or the really looks like the main continuation higher. And as we push back towards that MC point of control that we talked about in the ES, I'll cover that in a minute. But the overall sentiment is towards risk. Um, crude oil is leading the pack, up 1.36%, trading at 53.16. The Euro stocks and the DAX follow, and then we get the Nasdaq, the Dow, the Russell, and the S&P. Gold is off $9.70, trading at 1,504, and the cable, the yen, and the 10-year, and so on. The Bund are slightly lower. The bonds are unchanged from yesterday's settlement in the futures. So that's where we stand. A slight risk on sentiment after a pretty decent push up yesterday. In terms of the market theme, of course, the market theme remains the expectation from the Fed and the potential slowdown of the U.S. economy. And so these major numbers have a much bigger impact than they used to. I mean, the push up on this release was 20 points. It wasn't long ago, maybe 3-4 months ago, that unemployment would have maybe a 6 or 5 point move, and it would just be quiet. It was a non-event. But the market is really paying attention to this and is showing concern for what the Fed is going to do and an economic slowdown. So to me, hitting 50-year lows on unemployment makes it so that the bands may be a little bit stretched on unemployment. But again, I'm not an economist or a macro guy. It just seems to me like we're a little extended potentially. So the next step up is going to have to be inflation, as fewer applicants are available, or fewer workers are available, and employers have to pony up or pay more to attract them. So that's where we stand. Looking at the calendar, though, today we do have several key speakers. Fed's Bostic speaking at 10:25 a.m. Eastern, and Fed's Chair Powell due to speak at 2 p.m. Eastern. Brainerd at 2:10 Eastern. Quarles at 4, and Clarita at 4 as well. Pay attention to Fed's Chair Powell. He's likely, I'm not sure what. Let me see what he's doing. It looks like he may be taking questions, and this payroll number is coming in, is likely to be discussed. The Fed funds rates, Fed funds futures show about an 80 some odd percent probability of a Fed cut of 25 basis points, a little bit higher than it was a week ago when the market was much higher. So let's take a look at what was expected yesterday versus what we got yesterday. The primary scenario, given where we were, the expectation was we had a drop 2 days ago. We had a drop yesterday or the day before that. And then yesterday was expected to be mostly a balancing day. I expected the low to be taken out, but mostly for the market to stay inside of Wednesday's range. However, the ISM came out and gave us more of what looks like scenario three. We ultimately ended up pushing higher, just like what was expected for scenario one and two. The ISM kind of threw a wrench in things, and this is what it looked like: a fairly strong volume. Here's the ISM coming in a half hour after the open. Each bar here is 15 minutes, and you can see the volume was was a lot higher than the 20-day average, which is represented by these little black lines for that time slot. This is a 20-day mean on that time slot for volume on the ES, and we quadrupled, maybe even multiplied about 5 times what happened in the ISM. Then we get this flat snap back, a V bottom, back up into the range, and we start to shift up towards that 2916 area. We ended up staying just below at the high at 12 and a half. And my expectation overnight is we're likely to push through and start working our way back up to that 29, 26.75. Okay, so that's what I'm looking for, and the market's kind of making its way into that. Carrying the yesterday's action into the overnight pretty dead European session. Asian session, pretty quiet Asian session, and then the Europeans come in. We have a quick splash up to 29.18. And then we start to rotate lower, start to make our way towards that 2890 point of control area until the number came out, and the number had this big push higher. The overall profile last night is really not describing very much. It's not telling us much of anything. The market was in price discovery mode last night. And the volume was quite high. A lot of that volume came in with the non-farm payrolls, but overall, we're staying above 2,900, and we're likely to continue pushing higher. The high here is not doesn't seem all that sharp or all that unfair, and so is the low actually. Let's take a look at the order flow. Let's look at CT bookmap here. Here's the overall picture from yesterday. And what we see in the overall picture is this size that's been sitting here at 2920, which is what we kind of smacked our head against when we took uh, the offers and pushed higher on the non-farm payrolls. That was pretty much the initial ceiling. I actually shorted 29.17 on the non-farm payrolls. Of course, I couldn't participate in this. It was too quick, and I don't even try. But I shorted at 29.17, looking for a return back to at least the prior close at 29.1150 or so. And it took a long time for it to try to make the rotation. I had to close the trade to do this trader bite, but that's all I've done with the non-farm payrolls. So here it is on a close-up. There's the liquidity. You could see us pushing right into that. So we have an impulse pullback continuation, and then that triggered the short, and then the short rotation back to the prior close, prior high. And then from there, we get this bounce, which forced me to close the trade. And we're sitting sideways. So we're forming balance up here on low volume, and we're opening in a gap this morning. What is above and below us? When we look at the order flow above and below us, we have a fair amount of offers between 23 to 25. Remember, 29, 26.50 is the old microcomposite point of control, and it's the key magnet in this area. And then above there, 29.30. So 29, 23 to 25, and then 29.30 are areas to look out for. We would be in a gap zone that was left behind a couple days ago. and the 2930 coincides with a pretty a minor stock zone for me, so I'll look to engage up in there somewhere. Same with 25. So these are areas that I'm looking to see, unless we have an open drive up. I'm looking to engage and get short in those areas, fade the edges on those areas. If the market starts to trickle up, I'm going to look for short for a rotation down. Again, all depending on order flow. Beneath us, we have 2891 as the high liquidity area, with a little bit ahead of it at 2900, 2901, right in here. That's what the order flow looks like. Let's take a look at what we're expecting for today. I want to remind you that today is Friday, and that is like Friday, right? So please take a moment to hit the like button and find it on YouTube. If you're on Periscope, I'm not sure you can do anything. I think there's maybe some way to like something, but I'm really interested in having you hit that like button on YouTube today to help people find this channel. So what are we looking for today? Let's take a look real quick at 2 vol sigma is at 2955-ish and 2933. So this morning, the I didn't expect for us to open in a to open up here. Actually, I was looking for it to be to the non-farm payrolls to do its thing and then return back into 2912 or so. But in any case, we will likely have an open auction that attempts to push higher, looking for the market to walk itself into that 2925 liquidity, impulse down back into this week high from yesterday, 2912, and then to start moving towards yesterday the 2900 again before it stabilizes into the weekend. So looking for a push up and an impulse down, for a potential impulse down against the liquidity area and against the MC point of control. Secondary is we have an open auction that drifts down, moves down into the prior range, and pushes as far as 2900 or so, impulses back out, consolidates at yesterday's high, and then starts drifting back up into 2926. I'm not expecting very much range today. I'm expecting the range to collapse a little bit. So from the low of about 2900, I don't expect it to get past 2926 by very much. That's quite a bit of range to the upside. The third scenario is that participants come in and see prices as advantageous to the short side. We have an open test up. We take out the overnight high, drive back down into the range, consolidate, and then start to drift and move down, push down into the 2890 point of control, and then hold steady into the range to give us the resting day that we were expecting yesterday, before the next leg is done. The next leg is more likely to be down than up, but we who knows? We're still in a high volume area, high liquidity, high volume area on the profile, and we have skipped through the MC point of control in this range. So this is the overall expectation. Again, it's Friday. You want to make sure that you're not staking too much on any one trade. Don't want to go into the weekend with a big hole in our pockets. It is non-farm payroll. There's some positioning expected on the open and potentially some movement on Fed Chair Powell's speech or questions or whatever. But overall, I wouldn't bet too much on any one trade today, as always, and just let the market, come up with your bias and let the market come to you. Good luck, everyone, and I'll catch you to Monday morning. Take care.